Welcome to the dark side.
Welcome back, guys. This is part 2 of which we are going to call none other than what goes up must come down. Just like we talk about every time, 100% probability. That's what shorting is. It's 100% probability trading because what goes up must come down every time. And there's something that we call the parabolic arc. And the drop is coming and there's nothing you can do to stop it. It happens every single freaking time. And this is also, I believe, based off of Fibonacci retracements. Now, everything that I'm going to talk about right now is not to the T, but you'll see this pattern kind of play over and over again, where typically after a parabolic move, a standardized level of potential pullback is about 62%. And if we look at a Fibonacci retracement, typically how that works is when we look at the numbers here, Fibonacci from the 0 point is 27%, 61.8%, and 78.6%. This key level of 61.8% is basically what they're just using here, what we call the parabolic arc. There's about 62% retracement from the top of a pullback. And when we look at Ethereum, back when I was calling this, and I was actually heavily short here on Ethereum, over 4,000, the first run that it made up over that back in April of 2021, May of 2021, I posted on my Instagram saying, counting down the ticking time bomb on Ethereum, because it was gone 100% parabolic, a huge massive move from 2,000 over 4,000 in a very short amount of time. And I knew for a fact that the end was coming. I didn't know exactly when it was coming, but I knew 100% fact with 150 billion% certainty that a crash was coming. I just didn't know exactly when it was. And we'll talk about how I anticipated here at about 4250 that this was going to happen. But I also guesstimated that it was going to happen potentially around 3250. And I actually stopped out of my shorts here. But I was pretty heavily short here on Ethereum in this range right around here. And then the next day, this thing just absolutely got annihilated, where Ethereum eventually dropped 61.32%, right? Which is not necessary, ironically, at all, that the fact that the parabolic arc and the Fibonacci retracement 61.8, which is also parabolic arc 62%, look exactly what Ethereum did off the top to the lows. 61.38%. This is like a perfect example to the T of it going exactly about 61.8. But there's also probably the psychological factor of this, because people actually do look at Fibonacci levels like, okay, it's now down 62%, a perfect Fibonacci pullback. This is a great chance to buy the dip here. Technical analysis, parabolic arcs, dip buying, support levels, these are all self-fulfilling prophecies. They work because people are all looking at a similar idea and using these levels as areas to either buy or sell. These are basically just understanding levels of supply and levels of demand, and then people react to those levels, and then price action sometimes reverses off those levels. It's never perfect, but it gives us an idea of ranges to potentially be getting in or out. So you can see the Ethereum move there from my call, counting down the ticking time bomb on Ethereum over 4,000. Then literally the next day, it spiked out, had a blow off top of which we'll talk about here shortly, and then followed by a 61% decline on Ethereum. And so just looking at how every trade works across the board, guys, wolf versus sheep mentality, of which we talked about in Krypton, obviously, but we'll look at this kind of in the sense of a parabolic arc as well, basically on the risk of assessment of the timeline. Obviously, before things go parabolic, only a few people are looking at this as a trading opportunity. And this basically, we see a small diamond in the rough. These are the wolves that are looking at this trade down here when it's only maybe up, plus 10% gain in this range here, right? So the stock or crypto or whatever it is has made like a small potential move, or it's forming up in a pattern here, right? Forming up in a pre-breakout pattern before that actually starts triggering a massive move to the upside, which then leads to the diamond getting bigger, and then all the sheep fucking talking about it because now it's on the top gainers list. But we were there much sooner than that, before it even went to the top gainers list, right? So only a small percentage, maybe like 2 to 5% of the people who are in early on good investments are there. And then all the sheep and the hopium fuckfaces come in and crowd the thing, and that also leads to euphoric rises in price action because we need idiots. All these people who maybe after this thing broke out, now maybe a small group of people still get in here when it's, a little bit over the breakout level, and then all of a sudden it hits all the top gainer lists and all the crypto scanners. Then all of a sudden a bunch of people are tweeting about it, okay? And then that turns into this hysterical thing of everybody crowding around the next big investment opportunity, but it's not a big investment opportunity. It was a big investment opportunity back in the 2% range when all the wolves got in, right? Now all these people are living off the hopium syndrome, the hope and greed, and now that's going to lead to a parabolic and irrational spike to the upside, followed by a massive 50 to 80% decline after that, which then we try to take advantage of. And then we can see that exactly happening here on Ethereum, parabolic arc, obviously in the timeline. Then we saw this thing just go completely irrationally parabolic here. A lot of people are just buying in. Everyone's talking about it. I remember people tweeting at me, messaging me on Instagram, like all these girls, like, my boyfriend just bought Ethereum at 4,000. I'm like, you're crazy. Why would you buy something that's already up massively 100% in like a week? It's stupid. You're asking for trouble. You're asking to get your ass fucking kicked. And that's just the way it happens every fucking time. You can see risk of timeline. It was already risky up here at 2000. Yes, it did go up another 100% from there, but you're playing with fire when you're seeing these massive parabolic moves and massive gains here. And that crash is absolutely coming 100%. And then all of a sudden people start panicking. You can see on Ethereum, once it dropped, it just had these massive 20% plus candles where things just got completely fucking annihilated. And that's not fun to be holding long. It is fun to be holding short. I can tell you that. So that's exactly what happens. And it's kind of what you need to understand about the parabolic arc. What goes up comes down 100% of the time. It's just fact.
Welcome to the dark side.
Next up, guys, is what I call the big dance. And you're going to see this a lot when I talk about when we go over all the live trades later in this training. When you see when I'm actually making live trades and making money, you're going to see how and why I follow the big dance 100% most of the time. Now, I'll show you also where we're in a unique situation right now where it's not particularly working out exactly like this within some sectors. But for the most part, Bitcoin and Ethereum rule the world and everything else follows almost to the T. If Bitcoin drops and rises 5%, altcoins drop and rise 10 to 20%, right? So if we see a big move in Bitcoin to the upside, all the altcoins are going to go up. If all of a sudden Bitcoin and Ethereum eat shit 5%, you're going to see 10 to 20% drops in the altcoins, okay? So when we're looking at shorting, I don't typically short Bitcoin and Ethereum for the most part, even though we're just using an example in the previous video of me shorting Ethereum. A lot of times I'm looking for shorts in altcoins because, like I said, if you see Bitcoin and Ethereum drop 5%, we're looking for altcoins that are going to drop 10 to 20% because typically the percentage gains are like double in altcoins as opposed to Bitcoin and Ethereum, which is why altcoins are very attractive investment tools because whether you're going long or short, the gains as percentage points wise are much, much bigger. How I track and kind of look at and gauge what's going on is I look at the general market and look at Bitcoin and Ethereum, like, okay, is Bitcoin and Ethereum coming into a supply zone here after a big run up, right? Which is also just resistance. After a big run up, and then all of a sudden it says pumping into this resistance level. I'm like, okay, Bitcoin and Ethereum are at resistance. Now I'm gonna look for altcoins that are making similar moves into resistance / supply zones. So then I can look at those and potentially short those coins. And you're gonna see this a lot in the actual live trade examples. And when you do this and you're tracking what's Bitcoin and Ethereum in the general market doing, your altcoins are most likely gonna follow what Bitcoin and Ethereum are doing. Now, I do believe this is going to become less and less of a correlation as time goes on in the crypto growth adoption, but it's the same similarly when I look at the stock market. I was in the stock market for 17 years. Typically, if stocks are bullish, if the Dow Jones and the S&P 500 are bullish and in a bullish trend, I'm much more confident at buying, swing trades and holding, right? So it's important to understand these are basically just the indexes of crypto, Bitcoin and Ethereum. They're going up, altcoins are going to go up. If they're eating shit, altcoins are going to eat shit. Okay, just to give you an example of the current price action on Bitcoin, right? We saw a rip, all-time high, fail, come back down, come back up, a failure of breaking out all-time highs, and then now pulling back again. Let's take a look at DOT. The pattern in the chart is almost exactly the fucking same. Just slightly different percentage moves on DOT versus Bitcoin. But you can see, come back up, fake out, try to break out all-time highs, massive sell-off when Bitcoin and Ethereum sold off, things pump up, retest to try to break out all-time highs, failed, come back down. Same exact chart on DOT as it is on Bitcoin. And you're going to see this a lot across most coins. They simply just track what's happening in Bitcoin and they react almost delayed to what's happening with Bitcoin and Ethereum. So when I look at Bitcoin and Ethereum, this is where typically I'm looking at my analysis. I'm like, okay, Bitcoin's looking toppy, 2 failed breakouts here. This might be a time to dump all my long positions, right? As I stated on Twitter last week or 2 weeks ago, I was like, hey, I sold everything. I'm out. After we saw these 2 false breakouts, and these are actually what we call bear traps or bull traps. I didn't necessarily all of a sudden just go heavily short. I didn't really know what was going to happen. I didn't have a whole lot of confidence in going short at this point, but these signals are very bearish. Also breaking down the 50-day moving average here. Like, okay, I don't want to be part of this. I don't want to be super heavily exposed long in my day trading account. I'm going to exit all these positions and then wait for things to cool off and start buying the dip later. But I'm not going to hold through a potential, 30 to 50% decline, which is very, very possible on my long positions. Okay, so it's important that we understand that both of these things track each other, follow what Bitcoin and Ethereum are doing, do your analysis on where the supply and demand zones are, where the resistance is, where the support is, and then, we translate that into looking at, okay, if Bitcoin and Ethereum looking like they're about to eat shit, I'm going to look for some altcoins that are in a similar pattern, because then if Bitcoin and Ethereum eat shit, this thing's going to, potentially be 5% over here, but we can potentially do 10 to 20% gains in the altcoin space going short.
Welcome to the dark side.
All right, guys, next up, we're going to talk about picking tops and bottoms. At the end of the day, is it predictable? No, not at all. very difficult to predict. But what we can do is identify ranges of higher probability, right? That's all we're really trying to do when it comes to trading, is find high probability trades so that we can manage the risk and set up a trading plan around that higher probability of the outcome that we're looking for. So some key terms that you're going to hear me talking about a lot when I go into live trading examples and going into Decrypton theory in part 3 is, one, when a thing is at a top, I might say a supply zone or resistance. So when you see price action running up, the top would also be considered a supply zone, right? Might say, hear me say supply zone, or it's resistance, or it's a top, right? Those are all three one and the same. Supply zone, resistance, and top. Those are all when you see price action topping out and then reversing. Then on the opposite end of that, when you see a bottom, those are called demand zones, okay? Demand zone, or a support zone, or a bottom, right? All one and the same. These are all the key terms that you might hear me saying across the board. Sometimes I might say this is the top. I might say this is the resistance point. Sometimes I might say this is the supply zone, okay? I probably say supply zone more often than anything else, but they're all the exact same thing. Just so you understand and know that as we go forward. Now, one of the biggest things I try to use when I call a big trend reversal on Bitcoin is the 50-day moving average, which, like, I didn't just randomly pick this. You know, the 50-day moving average is not like a rare trend line or anything. But when you look at it on Bitcoin and Ethereum, it actually works pretty well for identifying the tops and bottoms of, not necessarily bottoms, but the tops of big bull runs. So I tweeted this back on May 6th prior to, this is also when Ethereum was peaking out at 4K, or right after it peaked out at 4K. And I was looking at Ethereum to potentially reverse. I was also looking at Bitcoin potentially reverse as well. And I said the last two bull runs for Bitcoin upon breaking the 50-day moving average resulted in 83% and 62% declines from the top. Not predicting anything here, just an observation of trend shifts from past history, right? So that's really all we can do, is look at past history of what happened before in these events and then maybe forecast that might happen again. So maybe rather than just completely ignoring that and being circle jerking each other, saying that Bitcoin's going up forever, maybe we should prepare for a potential short-term trend reversal, because that might happen. And then what happened on Bitcoin? As I tweeted that, you know, we see Bitcoin up here. This was that when it was topping out at 50 and 60K, then I believe it was around 57K at the time of me tweeting that, saying it was breaking down. What happened on Bitcoin after that, right? Bitcoin then proceeded to absolutely eat shit, 55% on the drop. And so that's basically, for me, the 50-day moving average breakdown is a very, very bearish sign and a potential reversal in the trends. As you can see, it initially broke down the 50-day moving average once. We saw a massive sell-off day, fear settled in, came back up, bounced in, then kind of consolidated into this zone, which was now a supply zone on Bitcoin in this range, before then breaking down the 50-day moving average again and seeing the massive decline. Then we saw it again over here, but it only briefly broke it down before making a wedge pattern breakout, which we're going to talk about next, how scary they can be for short trading, and then a retest up to these highs. And now we've broken down the 50-day moving average again after a massive run. So this first time breaking it down, we did what? An 82% run. But this time around, we've done a 137% run on Bitcoin. You could consider that a sizable run for Bitcoin to make. And now breaking down the 50-day moving average, I'm cautious of what this could imply. But we'll talk about, as you can see, these wedge pattern breakouts that led to these massive runs. Again here, wedge pattern breakout, massive run. So for me, I'm looking again now for a potential wedge pattern breakout and then another massive run. But as long as we continue trending below the 50-day moving average and below the 9, 13, and 20 EMAs, which we'll talk about later, this is a very bearish situation and trend reversal that's happening across the board on Bitcoin. But as I said before in the previous video about the big dance, metaverse and gaming is absolutely crushing right now. So as opposed to Bitcoin and Ethereum dropping and then everything else dropping, you know, we have still been crushing it across the board on Mana, where we got, you know, long down here at 85 and 99 cents. This thing absolutely fucking crushed it. You know, Senso crushing, Network crushing, Wild crushing. Okay, I haven't been shorting any of these. We've been longing these. So gaming and metaverse coins have been on an absolute tear, which is one of the most unique situations we've seen in crypto as of yet, where we have a whole sector of altcoins that are just absolutely crushing while, you know, Bitcoin is actually dumping. So it's good to see that, you know, we're seeing a little bit break outside the box of everything, you know, following to the T what Bitcoin does. In general, when we look at a lot of different plays, again, if we can identify when Bitcoin and Ethereum are reversing, that's definitely going to help out big time, not only to exit some of our long positions, but also potentially look for altcoins that are overbought, parabolic, and we can short and time that drop from Bitcoin and then time that drop from the parabolic shorts that we're looking at. Okay, so just an example of me talking about these things, okay? The Bitcoin crash 2121 is here. An altcoin bull run is over. Pack your bags. Everyone absolutely hated me for this video because I posted about this when Bitcoin was up at about 60K and then everything dropped 55% from there. And me just talking about it, people don't want to hear it. People don't want to hear anything that goes against their story. And then I have some other videos before Bitcoin made some other big crashes and also me making $116,000 profit. But actually I made about 30, 40 grand because I did have a lot of mistakes in those trades that you'll see if you watch that video. And also going short XRP, making $30,000 as Bitcoin was eating shit. So it's important to understand some of these trend shifts and picking tops and bottoms. Again, this is all speculation based off of signals in supply and demand, 50-day moving average, and other trend indicators, okay? But it doesn't mean that these things are happening. All that I do is prepare for these things to potentially happen. I don't know anything. I don't know when things are going to happen. I don't know if things are going to happen. All I can do is look at certain signals and be like, okay, this is indicating this potential scenario. Now I have to prepare for that scenario happening because the probability now is higher that that scenario might happen. It's never, this is what's going to happen, so I'm going to bet on that. It's, this might happen, so I need to prepare for it. But if it doesn't happen, here's my alternative scenario. If it does this, I'll do this. If it does that, I'll do that. And that's the mindset you have to approach trading in general with so that you protect yourself. If you're only one-sided in the long run, you're definitely going to get your ass kicked many, many times because you're not, protecting yourself against the risk factors. How to identify Bitcoin, Ethereum, and altcoin tops and bottoms? One, we need to understand how to read supply and demand zones. The 50-day moving average, MA, trends after massive runs in Bitcoin have typically led to massive declines in Bitcoin every time in the past history. If you look at anything, the 9, 13, and 20 EMA trends, of which we learned also a lot about in the original Krypton patterns, that you'll see me talk about a lot in the live traded examples, as well as in Decrypton theory, which is part 3 next. And also just understanding that parabolic things eat shit every single time. It's just a matter of when. Okay. So when we identify all these things, we can then prepare for when massive bull runs are over. Okay. And we call those cycles, right? So it's important to know that things go in cycles. We just had a massive cycle on Bitcoin twice in a row. Big cycle here, pullback, big cycle here, just absolutely crushed it in my account. I think I've officially went from 20K to over $1 million in profits. And now I have about almost 1.7 million balance in my account as of right now. But when we see these massive things happen and we're trying to potentially call the top, or if we see like a 50-day Bitcoin running into a massive supply zone, right? 50 MA broke down. What do we do with our longs, right? We limit our longs, we use tighter stops, and we potentially go short. These are all things that we should be doing, preparing for the end of the bull cycle, and then protecting ourselves, because so many times you make so much money, massive amounts of fucking money in these bull cycles. If you don't protect yourself when you identify trend shifts and supply and demand shifts, you can lose it all. And then you might even lose more than you made, okay? You can make a shitload of money right here, and then you keep trying to buy the dip throughout these massive fucking dips, or you're just getting swish washed out, like, oh, maybe this is the top. Oh, maybe I should short. Oh, maybe I should buy. And there's so much volatility back and forth. You can just burn up so much cash by not utilizing these massive cycles and then just taking a fucking break a lot of times through this wish-wash bullshit, okay? Patience is super important through a lot of this, but also identifying these trend shifts, getting out. When you see things flip, limit your longs, tighter stops, potentially go short to make money when things drop. It's very, very important.